Modern CPA. Our purpose is to provide valuable information to small business owners. On our podcast, Profit Points, we discuss business how-tos, give tax tips, and dig into real-life experiences in the crazy world of running your own business. If you find this podcast helpful, then like, subscribe, and follow us on social media. Welcome, everyone, to Modern CPA's Profit Points podcast. And today we're talking with Bryan Saylor about financial planning. Profit Points is a podcast set up for professionals, industry leaders, and small business owners to learn the crazy world of running their own business. And welcome, Bryan. Thanks for joining us today.
Yeah. Hey, thanks for having me.
And Sean Cahill, as always, is on our podcast as one of the owners of Modern CPA. We would like to know a little bit about you, Bryan, before we dive into some of the things that financial planners do for individuals as well as small business owners. So can you tell us a little bit about yourself and your journey?
Yeah. Well, look, first of all, thanks for having me. I've been following your podcast and what you're doing with Modern CPA. I love it. I'm appreciative that you'd have me on. So professionally, I'm a certified financial planner, been in the business for coming up on 20 years. Our firm is High Point Financial. We're located in King of Prussia, Pennsylvania. We are an independent financial planning and wealth management firm. We're helping individuals, business owners, we're helping families, even some nonprofits build and maintain wealth.
Interesting. So what does it mean, though, to be an independent firm? What does that mean?
Yeah. So independent means that we're not really tied to anyone. You know, we're sort of in the business of giving advice and helping people with all different types of solutions. We're not tied to any particular insurance company. We're not out there tied to, a discount broker or mutual fund firm. We're completely objective in the way that we go about providing financial advice.
So that gives clients some flexibility in what things they're using and what packages or insurances they're working with or having or purchasing. Is that basically?
Yeah, for sure. I mean, I think, objectivity is key. If I'm a person who's going and looking for financial advice, I don't want to be going to someone who is compensated more for, selling insurance or a particular type of insurance or to a particular company, right? So come to me and we decide that ultimately as part of your financial plan that, you need some level of insurance, some type of insurance, then I'm going to go out there and decide on what type makes sense for you. And I'm going to find the company that's doing it best, right? Based on a number of different things. But I'm going to find the best folks. I'm going to look through a list of a number of different organizations and find you the best.
Oh, that's great. So it's really the best interest of the client, basically.
Yeah, for sure. I think the world of financial advice is, it's kind of everywhere, right? I mean, everybody is trying to give financial advice. That could be, the big discount brokers that exist out there, the mutual fund companies or record keepers, the folks that have 401ks, insurance companies, your neighbor, right? Everybody's out there giving advice. And, I wouldn't be in this business at this point if it weren't completely objective. I don't want to be tied. I don't want to be in a position where somebody's tapping me on the shoulder and saying, you've got to sell more of our product. That's the right thing for the consumer.
Yeah.
So having that flexibility allows you to really be an advocate for your client and being able to provide them with a lot of different options and resources to meet their financial needs.
Yeah. I think, advice has to be personalized. It has to be customized. That might sound cliche. I think, you hear a lot in our business about comprehensive and customized, but at the end of the day, I think that it really is. It's what it comes down to, right? I mean, it really has to be. Every person, every family, every business owner is different. They've got a different set of goals and needs and family setup and business setup. And my job is to right. And, once I've listened well enough and I've asked the right questions, I can use that information to get these folks to the right space.
That's so great. So tell us about your journey a little bit and where you came from and like what led you to get into this practice on your own, basically.
Yeah, for sure. So I graduated with an economics degree. I didn't know what I was going to do with that.
Business something.
Yeah, exactly. Like, I don't know. I mean, I'm not sure, but I don't know what I want to write. I have no idea what I want to do. Honestly, I didn't know how much I loved economics until probably 5 years into this business.
Wow.
I started as a finance major in school. I went through 1 or 2 accounting classes and decided that was not for me.
Not the avenue for you.
And, I was like, okay, well, maybe I can get into econ. And I was political economics. Liked it, but I didn't realize I loved it until I got out of school and really started getting into this business, which for me started at Vanguard. I had some friends that worked at Vanguard, big local firm here. Mm-hmm. I went and started on the phones there, which a lot of folks do. And,
well, it's kind of the bottom, right?
It is for sure the bottom. It could have been the mailroom, I suppose, but it was answering 100 phone calls a day, people calling with transaction questions or transactions. Some of them had investment questions. I was changing addresses, but 100 phone calls a day, for anybody that's worked in a call center that's tough.
A lot.
And so after a month or 2 of that, I was like, oh my goodness, what am I going to do?
We have to do something different here.
Exactly. And so I had to start there. I had to study for the 6 and the 63, which are, investment licenses. And it kind of piqued my interest. I hadn't been particularly interested in investing growing up, but I'm awfully curious and I hated not having answers for people. Right. So people are calling in and they're saying, hey, change my address. But, oh, by the way, what about this investment? And what do you think? What's going on here? It was not far after the .com bubble bursted. And, people just had a lot of questions I couldn't answer. And I hated that. Mm-hmm. And so, I would go and I would research and I'd ultimately, every question that I couldn't answer, I'd learn from and I'd write stuff down. And I said, you know what, I really do like this. And I think that I want to make this my career. And so I started studying for the Certified Financial Planner designation, which I think is kind of the premier designation in our industry.
Got it.
It's a designation that requires studying for, 5, at that time it was 5 different tests, like little 2-hour tests, investments and insurance and estate planning and taxes and just overall the planning process. Yeah. And it culminates in, at that time it was a 2-day, 10-hour test. And so I started, I kind of got into that on my own. Nobody was paying for it at Vanguard. I just kind of started studying for that on my own. And they came to me and said, hey, look, how would you like to go to the planning group? We see that you're really interested in this. If you go to the planning group, they'll pay for it for you. And, oh, by the way, you're not going to be answering 100 phone calls a day.
So, like, maybe let's do that.
Yeah. I was like, okay, sign me up. How do I sign up for this? Right. I like moved my stuff around my desk that day. I'm like, hey, I'm in. Yeah. And so they moved me to the planning group and, I ended up sticking around for about 8 years over there. And, I'm really thankful for the time that I had at Vanguard. I think Vanguard is a great organization. I think the philosophy of low costs is one that sticks with me. I knew not too long in, I knew that I wanted to own my own practice. Okay. It didn't take me long to say, hey, look, at some point I want to be an entrepreneur. I want to sort of own my own business. Yeah. How do I get there? And so Vanguard there was a lot of volume, right? I mean, I was talking to a lot of folks and that gave me a lot of practice. And, for me,
experience. Yeah.
Sure. I was young. At the time, I'm, in my early 20s. I'm thinking, how can I give these people advice? I don't have all that much in life lessons and
life experience. Yeah.
Exactly. And so to be able to talk with people and answer questions and deal with all that volume was super, super helpful.
Mm-hmm.
But at some point I was like, hey, look, Vanguard's got a pretty basic investment philosophy. It's kind of all about broad-based indexing. I'm not talking about insurance and estate planning and a good deal of tax, but not talking about some of these other areas. And I need that experience. And so, and in addition to that, I needed some sales experience. So I kind of kicked tires on a couple different places, and I ended up down at Fidelity in the Center City office as an account executive. So down at Fidelity, I was servicing a book of, 300-400 clients, high net worth clients. It was a really great role. I was, I was on a day-to-day basis kind of shining the light on all that Fidelity had to offer, which was, from that perspective, which was much more broad-based than ultimately what I was doing at Vanguard. So I was helping folks look into options trading and, just a lot of things I wasn't talking about at Vanguard. About 2 years in, I was realizing that, look, I've got 3 little girls at home, and they're not seeing me. I'm commuting an hour and a half. I'm working long hours.
Yeah. And you just knew that you were still, I guess you still had that in you, that you wanted to be on your own and an entrepreneur and wanted to make that dive at some point. So
that's exactly it, Michelle. I was like, look, it's time, buddy. You've been kind of practicing for all this time. It's time to get out there and take that leap. And I think that's tough to do in this business. As I said before, there's so many different planners out there, so many different investment advisors. It is tough to do. And, I didn't necessarily feel like I had a huge amount of clients that were going to come with me. I didn't have a ton of family wealth that I could count on. So I think in this business, either you've got some other income source, you live at home and had minimum expenses, or you figure something else out. And that's where I was. Like I said, I had 3 kids at home. I had to figure something else out. And so I connected with an old friend of mine who I still am with today, who has turned out to be a great mentor to me. And he had jumped out from Vanguard, about 6 or 7 years prior. He had built a successful practice. He needed somebody who could help him out. Somebody who was good at planning to help him out with his best clients, and then also help him service some of the people he couldn't get to. And what I needed was stable income.
Yeah. You have responsibilities. You got to make sure that that's satisfied in some capacity.
That's right. So, you guarantee me a specific amount of income, and, I'll build my book from there. So I joined a firm that was about 25 advisors, if I recall. This is in 2015. And, it wasn't long that I realized that while I wanted to be in this space, I wasn't sure if this is exactly where I wanted to be from a firm perspective.
Got it.
And I wasn't the only one. And so a couple of my, fellow advisors over there were kind of thinking about the book of business that we had. And we were saying, hey, look, is this ultimately the structure that we want long-term? And can we do this better for our clients? I won't get into a lot of the details, but I'll just say that, the answer was yes. As we started kind of getting out there and checking on, who we could be working with in terms of our broker-dealer relationship and just thinking about overall structure of our firm, we decided that we could do it better. And so we created High Point Financial.
That's awesome. That's such a great thing.
How many advisors went with you? So how many partners do you have?
Yep. So I've got 3. Yep. So 4 of us came, 3 partners. And, in hindsight, I feel really grateful that almost every client came with us.
Nice. That's always scary too, because you've built, you're trying to build such a book to keep you going and service those clients. And if they decide to stay with the practice that you were with, that's a little scary.
Yeah, for sure. It's always, I can't say I've been through it other than that one time, but I think for most people that have done that, there's definitely a lot of concern about who's going to come with me, what's involved. I mean, it is a big undertaking to go out and do that. I mean, there's a lot involved. I think one of the keys for us was, finding a broker dealer that we could work with. And so, in my space, we have two partners in our business that really provide us support, right? The first is our broker dealer. Our broker dealer really serves as kind of our back office. They're our compliance and technology provider. They're the folks who are the in-between us and any of those companies I was talking about before that we do business with. So all the mutual funds that are out there, and insurance and banking and alternative investments and all that stuff that exists, our broker dealer kind of helps us vet them and helps us maintain a relationship with them.
Interesting.
And we've got a great one. Commonwealth is just a fantastic partner, one that I hope that I'm with for the duration. And then our second partner is National Financial Services. We're not holding assets in the safe at High Point Financial.
Thank goodness. Don't tell them where
No, I'll forget the combination or something. So, look, National Financial Services is really Fidelity. It's Fidelity's institutional arm. That's if you have investments with me, that's where we're holding them, National Financial Services. So two really great partners there.
Nice. That's so great. So let's get into a little bit about what you can do for people. And, I know you wanted to talk a little bit about maybe the market and where it's at right now. We're in May of 2022. And so this could change as of May 19th of 2022. So, tell us a little bit about, what you're seeing and what people should be looking out for.
Yeah, not much to smile about in the markets these days. Right? It's really been tough sledding. If you looked at the markets today, they're down 2 or 3%. It's been awfully volatile. U.S. stocks are down over 15%. International down probably closer to 20%. And along with that, bonds down like 10%, which is really kind of an anomaly. You just don't see it that often. And, so I think this is largely about inflation at this point and what the response is going to be by our policymakers at the Federal Reserve. But, I just to understand kind of where we are today, I think you really have to take a step back and look at where we've come from. We've come from a place where we've seen tremendous growth in the equity markets coming out of the 2008 Great Recession. Kind of this great reset. The 2008 down market was largely about lending standards and banks making big bets. It was a banking crisis. And then we came out of this with this very long period of super easy money, very low interest rates. And I think if you combine that with technological innovation, think iPhone, think Web 2.0, think artificial intelligence. If you combine those two things and maybe even some demographic changes, it really has landed us in this, what they call a secular bull market. So there's just long-term bull market run. If you look at the return of stocks over the course of that time period, it's significantly above historical averages, right? So
I guess people have gotten used to that because it's been in existence for quite some time now, and they may think that it's always going to be that way.
Yeah, people have certainly gotten used to it. There's no doubt about it. I think, we were that bull market run, who knows how long it would have lasted. I think it was showing signs of stall as we came into the pandemic, right? And so 2020, life changed for everybody. And, it got really scary there from a health perspective, but financial markets got really scary as well. And, demand just at that time, demand was ultimately kind of non-existent. It was like everybody's going to just hang out in their house and who knows what they're going to buy. And, that was causing significant downside impact to the stock market. The stock market lost 35% in roughly a month.
Oh my gosh.
And, financial markets were seizing up everywhere. The bond market was sort of losing its liquidity. And so the government stepped in, right? So the government comes in and they sort of shore up the bond market. They, through monetary policy, meaning they reduced interest rates. They started buying up bonds, right? And through fiscal policy, they were kind of giving everybody money, right? People checks, giving states money directly, giving businesses money. And so, boom, all this money floods the system. And I think science came in and ultimately sort of, they had to do that. It was an insurance plan. Science came in with the vaccine and medicine, and it came in and sort of changed things faster than what policymakers initially thought. That's my view.
Okay.
And that's kind of led us where we are here today, right? So where we stand today is we've got an inflation, story.
It's been a problem for a little while too. So
it's been a problem for, depending on what measure you're looking at, going back here 6 to 9 months. I think people thought about it a little bit longer than that. But inflation, honestly, has not been a true story for really about 40 years.
Wow.
Right. And so I think right now what you have is you've got a whole lot of demand out there because all of these businesses, all of these families, they're kind of flushed with cash. The government gave it to them, right? But that's coupled at this point with some supply problems, right? We hear a lot about this whole supply chain thing. Yeah. I think people that I talked with thought that mainly had to do with, sort of labor shortages here in the U.S. at the ports and all that kind of stuff. I think it's been sticking with us because of the zero tolerance policy that China has around COVID and the war in Ukraine, right? And so you've got supply side problems and a whole lot of demand, and that's leading to, year over year inflation of like 8.5%. And I think the markets at this point are basically trying to price in, and this is the cause of the volatility. They're trying to price in the ability of the Federal Reserve to ultimately stop that. Can the Federal Reserve can reduce demand, right? But I'm not sure the Federal Reserve can do anything about what's going on in China and the war in Ukraine, which seems to be at this point kind of a war of attrition. So that's what I'm seeing in the markets right now. It really is a tough environment to be in, with really no place to hide out outside of cash and maybe oil or broad-based agricultural commodities. It's tough.
Yeah. So do you have anything as it relates to the markets that small business owners need to be aware of on their side of things? Anything that you can share with us that, they should at least keep an eye on?
Is there anything they could be taking advantage of with how the situation the way it is now?
Yeah. Well, I think that first of all, they could always take advantage of tax loss harvesting, which is something that I'm sure you guys are very familiar with. If you've got investment accounts that are non-retirement and, you've invested it and you see losses in those positions, you can ultimately sell out of those positions, take those losses, kind of put them to the side, but then immediately buy back into positions that are similar and maintain your market exposure. So those losses can be used to offset future gains. They can stick with you on your tax return. They can be used to offset some income. So that would be one thing that I would think about for business owners. I think probably more importantly, I think that preparing for markets like this, it starts with, education, understanding truly where you are and what the markets are. I mean, what do they really do? As a business owner, I think that, the markets, the stock market in particular, this is sort of secondary to all that they're trying to accomplish with their business. And they've got to decide, if they're looking to build wealth outside of what they're doing with their business, how much do they want to put at risk in the markets? Because the truth is, the stock market, go back 100 years, 1 out of every 4, roughly, there have been losses. Right? And it's be super unpredictable. So I think, as I think about the business owners I work with, and, for that matter, most folks that I work with, it all starts with making sure that I truly understand their situation, understand truly what risk they're comfortable with, asking questions about, if you lost X percent, what would that do to your situation? And ultimately, I think this comes back to sort of cash flow. And how these investments truly are going to be used down the road, when that's going to be, and what does their cash flow look like day to day? Because if it's not solid and they need this money, then I can't be putting them in a position where they could lose 20% like they have this year.
Exactly. I know a lot of small business owners rely on their business as their kind of retirement plan, and so if they do have extra money, we need to be sure that they're okay. Like you said, having that long-term game plan, it's not going to be something that they're going to be able to liquidate easily. It is easy to liquidate, but at what cost, the loss that could be incurred, or, you got to think of it not as like gambling money, but, just at risk money potentially.
Yeah, no doubt about it.
Yeah.
Business owners, some business owners, you're right. They're not heavily invested in the market in many cases, right? Because they're like, this is my thing, right?
I'm investing in me.
This.
Yeah.
That's right. It's all about human capital. I can control this. And then, there's a certain segment of business owners that says, hey, look, I'm going to take what I'm making here. I'm going to put this in other markets. That's kind of where I come in as a partner, in addition to some of the planning work that I'm doing with them.
Yeah, that's so great. So tell us what you do then to help them, what you do for your clients, whether they are individuals that are coming to you, individuals that own businesses, or the businesses themselves. Tell us a little bit about, what it is that you do for them.
Yeah. In general, as I think about kind of simplifying down what I do in my practice, I think it's kind of two sides, I think, and they're both kind of surrounded by process. I think on one side, it's about planning, right? Mm-hmm. It really is about kind of going through the process to understand, what's important, why is it important, and then all the numbers, right? All the quantitative stuff, right? All the, the stuff outside the numbers. I've got a pretty good process and technology, pretty good planning software system to help out with that. Mm-hmm. And so I think the second part of what I do is I kind of use that to go out and find solutions for people. Right. And those solutions, sometimes, I think the base of those solutions is the stock and bond market, but, there's a whole lot of different solutions that exist out there, in the alternatives market, a lot of banking products that I think are compelling right now for people. A lot of, the insurance industry is not just about traditional insurance. There's, some products out there that can ultimately provide a whole lot of downside support for people and kind of set them in position where they know what the absolute returns are going to be, what the max is, and what the what the minimum is.
Minimum risk, or yeah.
Yeah, exactly. There are solutions that exist out there in the banking and insurance world right now where you can say, hey, look, I'm going to take on just this amount of loss. Like, for instance, I'll take on the first 10% in the insurance company or the banking institution. They're going to take on anything below that. And they say, sure, no problem. But on the upside, you can only have, let's say, 13% annually.
Yeah.
Right. And that's just out. Right. Mm-hmm. They'll cap you out. And so I think for some investors, for some portions of their portfolio, they're willing to say, sure, I'm okay with that. That sounds like a good deal to me.
And it's personalized, right? Because everybody's risk tolerance is different and what they are willing to do is different. So what's good for somebody may not be good for the next person.
That's right. If I think that if you're young and you're kind of an accumulator and you're just building wealth and you understand time horizons, you're okay with the ups and downs of the market. You kind of set it, forget it, and put it away. But I think, if you're in a position where you've accumulated significant wealth, you're trying to lock that up. You're saying, hey, look, I need to protect the downside on this. And, if you believe like I do that the markets, at least in the short term, are unpredictable, then taking a portion of your portfolio and putting it in something that gives you some guarantees, kind of shifting that risk away from you to someone else through options trading or through, insurance companies or whatever it may be. Sometimes it really makes sense. And so as I think about all the solutions that are available to us, I do think we have the ability to truly personalize this for people. And, for business owners, I think we're kind of starting there. And I think for business owners beyond that point, I think a lot of folks in my business that work with business owners, they want to work with them when they ultimately sell their business, right? When at the windfall, and I can put your sort of your money to work. And I certainly want those opportunities. I think I can help those people maintain that wealth and help them figure out ultimately, how much they need to retire on and what that core is and what they should do with what's left over, what the excess is. But I want to be working with business owners throughout the process, right? The folks who are deep into it every day. And where I help them is I help them get organized. I have my planning software system can help them put all their documents they have for personal and business in a vault and have it be secure so they can go back to it at any point, right? We can help them analyze their cash flows. The second thing I do is, help them with their other professional relationships, folks like you, right? I want to be part of that circle of people, with their accountants and their bankers. I want to be in that zone with them and help them out. I think what we saw in 2020 taught us a whole lot about how important it is for those professional relationships. You just think about PPP loans, and EIDL loans, and,
so many
all
things.
That. And these people, what's going on here, right? They've got their business. They don't know how that's going to go. And the government's saying, hey, we can, give you this money. And so, having a banker that you can count on, having a CPA that can help you interpret that stuff, and me as the person who can help them translate ultimately how that's going to impact their personal financial situation, I think that's hugely important. And that's a part of what I do as well.
Yeah, I think that's so important that you say that, because we're going to be offering a course to small business owners that also teach them some of these things on how to run a business. And one of the modules is what kind of team members do you need to have on your team? And your team members are going to be people like the lawyer, the banker, the financial advisor or financial planner. And there's a whole list of people that really need to be considered to be on your team because they all work together so closely. So it's good that you say that, because it's so important.
Yeah. Yeah. And again, I think just go back a couple of years, sometimes I think as a business owner, from what I've seen, you can get kind of like really focused on what's going on in your business. And then it takes moments like that to ultimately tell you how truly important it is to take a step back sometimes and make sure you've got those valuable partnerships. And I know, you guys during that time period were probably, deep into understanding what was out there in terms of those loans, who was qualifying, and then the whole process of, how that was going to be forgiven, not forgiven, and
it was a learn as you go thing.
and their rules were changing daily, and things were coming out. And it was a constant moving target. But, like you said, working with, having close relationships with good people that are financial planners, financial advisors, bankers, made some of that process easier because we can talk to these people to help our business clients. And those are the relationships that I think work out best when we're working together, we're meeting with clients together, or at least, we are working with each other to help the clients.
Yeah. I know you guys are pretty deeply involved in, doing proactive tax planning. I don't want to speak for you, but you guys are I'm sure you're doing some consulting on, really trying to understand these people's business and see if you can help them out with the bottom line. I think, where I come in coordination with that is helping people out with, if they don't have a retirement plan in place, what might make sense for them. If they do, and they're a larger organization, is the plan they have in place one that truly makes sense? We would evaluate their record keeper. We would make sure that their third-party administrator is the right one. Make sure that they're doing the right, that the plan design is set up properly, given the goals that they have. I would help them out with their insurances. What buy, sell Do they have insurances on key people in their business? Do they have, a buy sell that speaks to their operating agreement? That's the stuff that's my piece of this.
Yeah. And a lot of times you see that business owners don't address those things. They just don't even really think about it until probably it becomes a little bit more important when they get those employees and they're getting their first employees and they really want to retain people. They start to think about that. And when they start getting some real key employees, like you said, Keyman insurance is really important in those instances. And then if you have other people that are in partnership with you, whether it's in a true partnership or an S corporation, what's going to happen if someone passes away, right? So that's really, really important to address those issues.
Yeah, for sure.
Yeah, and a lot of times, you start your business and you set these things up, but you're now 5, 6, 7, 8 years into it, and you haven't gone back and looked at it to see if it still fits the organization that you're in.
Yeah.
So Bryan, how often do you think people should be talking with you as the financial advisor? What makes the most sense?
Yeah, I kind of leave that up to who I'm working with, right? So, there are certainly people that are like, hey, look, I'm good with annually, right? Like, I know that behind the scenes, you've got a process for how you're managing my investments. I see that you're doing transaction changes. I know that you're very into the markets. Maybe once a year we meet, but I see articles that you send out from time to time, and that's fine. I have some folks that are, hey, call me every quarter. I want to sort of a market update. And then I think, if there's a significant change for the family or for the business or whatever it is, I think that's a triggering event as well.
Yeah.
But really for me, if I don't talk to you annually, you can expect that I'm going to be bugging you. I'm going to be, kind of knocking on the door.
It's like, oh my gosh, that time again.
Yes. For sure.
It goes fast.
Yeah. It does. But, I think, I know with working with clients, the more often we're talking with them, the better we can help them, the more value we can provide them. And I think that's important with all the professionals.
Yeah. As I continue to build my practice, as I think about ultimately who I want to be working with, it's folks that at the end of the day, they want me as part of their relationship on an ongoing basis, a part of their life on an ongoing basis. Mm-hmm. So as I think about like who I'm targeting, I want people who are fully engaged in the planning process. They can get me the information I need in a timely fashion to be able to give them ultimately the education that they need and find the right solutions for them. So yeah, I think you're right there.
So great. Well, Bryan, thank you so much for joining us on the podcast today. And a little recap of what we talked about. We talked about your journey and how you ended up becoming a certified financial planner, and how you're helping your clients on a regular basis, achieve their goals, and ultimately maybe even retirement goals as well. And we talked a little bit about the market and how it may not be doing so hot, and maybe some things to keep in mind. But we are so thankful that you're with us today, and we are asking anybody who has listened to this podcast, please subscribe to our YouTube channel and follow us on social media. Thank you, Bryan, and then we look forward to future podcasts.
Yeah, hey, I'll be listening. Thank you, guys. I appreciate you having me on.
Thanks, Bryan.
Thank you. If you find this podcast helpful, then like, subscribe, and follow us on social media.